as we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets, having been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone.
Ah.
You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And, you know, and the fractional shares is given access to markets. Welcome everyone to the Kendall Report. It is Monday night. Interesting day today. Had a bias to the upside for most of the day, but very choppy session. It was more difficult to trade, I thought, than easy, just the way the configurations were setting up. But I couldn't come up with a good title. My notes are almost empty, so I'm thinking that maybe I'll go through the dollar and a couple other things tonight to fill in some space, because there doesn't seem to be much to talk about. There's some earnings coming out. We do have retail sales coming out tomorrow. That's going to be the feature. Both the earnings and retail sales will be what we'll be talking about. Retail sales expected to be up 0.4, and then there's a bunch of retail stocks reporting today. I guess that the big trade today was all of a sudden the steel companies are in play, with U.S. Steel up big numbers. And if you're a WaveTech user, you owned it. So that's a good thing. But the point is that we're really just in this place in the market where folks are getting all bearish again. And guess what story they're trying to dig up to make it? China, okay? It's all about China and the real estate market in China and all of that. Once again, it's, what was it? I forget, Evergrande or something like that was the last story. Now it's countries. I don't remember the name, but there's a real estate developer that's way bigger than them. And of course, you know, Evergrande thing never caused anything, and this is not going to cause anything. I mean, it's just it's something to talk about. And I saw the most bullish thing I saw today was Michael Burry went short supposedly on a bunch of puts and bought a bunch of SQs. So that's interesting. Maybe there'll be some gratification for a minute, but we'll see here. I'm not bullish by any means, as I've been talking about. I'm expecting some choppiness in the markets, not really seeing anything other than that from the standpoint of the markets. We still have the intermediate trends up. We still have the monthly trends up. Well, I'm not going to cover that today, but we're actually mid-month here on the 15th. But we'll go through some details and try to cover a bunch of things. Of course, we don't have a database. The database is about to run, so I don't have those numbers, but I suspect it's starting to stabilize. We were at 31% bullish yesterday on the short-term database, so I'm looking for some stabilization here, probably staying above that magical 28 number that I talk about, all of those things. One of the things that I will focus on today will be talking about the treasuries. We're going to look at some of the other maturities that we don't normally look at. So little expanded section on treasuries. We'll go through the Dow. I know I was haven't covered the Dow maybe for 10 days or more, maybe in the last couple of weeks. And back then I remember talking about, it was bullish, looks like we're going to 103 plus. I'll take a look at that and see if we're getting close to the end of that. But let me just look at a couple other notes I have. So let's just talk a little bit more about this bearish sentiment from the standpoint of what I think is going on. I mean, not everybody. I hate global labeling. A lot of folks have been wrong this year. We're running into a lot of institutional advisors and people that have just missed this thing. Everybody, and I talked about this a little bit yesterday. It's really about this inverted yield curve. It just kept everybody out of equities. It's really funny to watch, folks. I'm telling you, I think what we are going to see going forward is, like I've been talking about, and we'll go through details here in a minute. I'm going to break down a few more elements in the Treasury segment tonight. But I'm just telling you, that's the driving force. Everybody's convinced of this recession. Now, I don't like seasonals necessarily. I don't like what I'm about to say, but I'm going to say it anyway, is that there's never been a recession in a presidential election year. Isn't that interesting? So we're coming into 24 and everybody's talking about a recession. It's certainly possible, but the Fed is so-called, I'll do air quotes, unbiased. Maybe not. Who knows what's going on anymore with the things that we see going on this planet right now. I won't I won't mention a couple of things that on my mind right now, but from an economic standpoint, we're still grinding forward here, and we're not really seeing any real cracks. And I hear people talk about the bad economy. I can't find it. I keep trying to find the bad economy. All the restaurants are full. You folks know the drill. The parking lots are full. Lots of business going on everywhere you go, and in spite of the inflationary pressures. And I think I saw an old one of the former Fed presidents on today. I think it was at Dallas. Don't remember the guy's name at the moment to bring it up. But it was interesting because he was sounding a lot like me and the concerns that I've been talking about, the back end of the yield curve. And like I said, I'll cover a little bit here on the front end. Then when we go through the treasuries, I'll break it down just a bit more. But the back end of the curve is going to be the focus. We've been focused on the front. Now we're going to be focusing on the back. And the back end is going to be loaded up because they need to refinance this thing in a big way. So I don't expect a liquidity crunch, but there are some illiquid situations going on from the standpoint of the players out there and who's coming into that treasury market. And you're going to have to see rates go up to actually attract dollars there. So more on that in a few minutes. So, but looking at yesterday, what did we talk about last night? We talked about a little rally, S&P up 0.58, NAS up 1.05, Russell down minus 0.24, and that was because of the banks, the regional community banks got hit for $1.25, $1.50 on that side. So there's really that element still out there, and I know there's people starting to talk about the banks a little bit again, and of course we have the ego trips between Fitch and Moody's still ongoing. I would fully expect to see them update their analysis at some point. So we'll see how it goes. So let's go ahead and let's get right into the technicals tonight. Like I said, I'll cover the Dow and we'll go through our normal sequence, but there'll be an expanded section on the treasuries tonight. So let's go ahead and get into that. All right, so as we look at the treasuries, let me fix the scaling here. If you watched last night, I talked about seeing a top on the treasuries into London. It's exactly what happened. If we look here, this is where this spike was. Not only did we get a high at London, we got an RTX sell signal, and then we declined right into the open this morning, and then get pretty decent bounce. All the algos were turning up this morning. It was a pretty obvious trade off the lows once we established some consolidation down there. And so we'll look at the angle of attack again. As always, looks like peak values trying to get into around maybe an hour or two before London, and then we're seeing the algo starting to turn down again. But we'll go through the market grid here in just a second on the daily, but probably a pretty good indication that would come back into 95. We'll get the actual numbers here in a minute in the market grid, but it looks like that's set up. And one of the things I tried to show you on the video that I did on Friday when I was covering how to use the algos and how to use the WaveTech indicators, and I was using this 5-second, 1 minute, 5 minute, and an hourly chart. And the hourly chart would give the general direction of the intraday trend for up to 1 to 3 hours. And so you could trade off the other shorter term stuff. And it was pretty amazing. If you haven't seen that video, go watch that. I think that was a good illustration of what goes on and how the predictive indicators actually work. So if you haven't got the indicators, go ahead to kendallreport.com/indicators and you can get there. We're looking at the last couple of weeks of the special that's out there. So make sure you step up and get those. And those of you that bought, email us before, email us for a discount code and you'll get a deep discount. So just make sure you get that discount code. Okay. So, but let's go ahead and take a look at the market grid on the daily basis. This is what I've been talking about. Looks like we've got a good shot at crossing through the first derivative to the upside. We should start to move up toward the 45.50. Mentioned these numbers last night. 45.50, 45.60 is going to be a pretty decent number. We should start to rally. We actually have one of these classic bubble bottoms that I talk about all the time. So you can see these little rounded bottoms at each low here. Let me just draw these in so you can see them. 8 Windows 11. Okay, so here's the bubble formations here. They seem to come at all these lows right here. Now we got another one forming here. And they don't necessarily have to be a new high or anything like that. They just will start to set up that pattern. And then what we see here on the actual indicators, you see the algos all starting to turn up here. All three of them, even the 200 is starting to turn up. So we should see a test of this top moving average here, which I believe right now is the 21. Let me just bring that up. Yeah, the top value is 45.50, which is the 21-day moving average. It's still negative, but not by much. 0.04, that's not enough to really cause any resistance, so we could trade above that. And one of the things that's still out there, we still have valid Fibonacci targets up here at 45.85, and then again at 46 handle, 46.22. So I suspect that we're going to at least set this up. Like I said, we can't get a look at the database until tomorrow, but my expectation is we're going to see some traction starting to come back in and start rebuilding it. So if you watched yesterday's video, you'll know I was talking about the rebuilding of the structure of the database on a short-term basis, and that's likely to have that's likely to come out on. So all you need is an HTML browser who's asking about Linux, and the answer is yes, as long as you have an HTML5 capable browser. So, but all of these patterns that are setting up here are suggesting stability and then higher prices down the road. And I went through the let's look at the grid here real quick just to get those numbers out there. And what we're looking at, S1 is 4,500, but S2 44.93, and that's roughly where my expectation is that we will probably try to bottom. We're at 45.07 right now. There seemed to be some really good action. I'll show you yesterday's numbers here just in a second. But 44.93 S2, R2's 45.21, R3 45.38, and then RTX 45.35. So I'm looking for a 21 to 28 at least. We could print RTX. One of the things that is happening, I've been discussing this, we're seeing further contraction of the volatility. And when that happens, that's typically when we see the market trying to reverse. And that's why we're getting this little bubble bottom here. And like I said, I'm not expecting some huge rally, but these fib targets are still live out there. And that would be the upper bounds, I think, up here at this target 2 is 45.90. You know, that would be an interesting test. That would really mess with these people that are bearish if we were all of a sudden trading back up near the 46 handle, because no one's expecting that at the moment. So that probably means that it will happen. But this pattern looks like it's set here. The algos are suggesting that somewhere over as we come into next week, we're going to be potentially seeing positive trends, positive moving averages coming back again. So I've told you before, I'm just looking for a really sideways choppy range. I think we get back into this upper 45 handle, and then we come back in and just continue to chop. Now, what we need to see here, though, is an expansion of volatility. And with it getting so narrow, all of a sudden, it's going to be very possible for us to get up and challenge that RTX number, because it's really very narrow at the moment. So watch those numbers there. As you would expect, we have the similar type pattern here on the Nasdaq. Only difference is that Nasdaq PPM1 is turning up. It looks like possibly on Wednesday we might get enough there where we can trade back into the resistance area right now, which is around 15,475, around those ranges right there. We're just looking at the market just continuing to stay in this range. Now, sometimes I miss something. These red dots that are on the bottom is a giant pivot. That is the number that you want to, if that number is taken out, then Michael Burry would be right for a short period. And that is 14.9. See, let me make sure that's the right number here. Yeah, 14.980 is that where these red dots are. That's a pivot point. A close below that would be negative. But right now, if you look at just the market grid, it's done the same thing as the S&P. It's just contracting right now. The volatility is just dying here. It's not increasing. And today was, like I said, it was pretty choppy. That last hour and a half was pretty choppy right into the close, and we got a little squeeze on the close to go into new highs on the session. So just look at this pattern. You can see the algos are suggesting we're going to improve a little bit, but on the Nasdaq, there's a little more heavier resistance overhead around that 14,980 is where the, hang on, that's the wrong number. Let me correct that. At 15,530 is where the resistance is overhead here. We should be able to trade up toward that range. So watch for that over the next several days. Like I said, you've got the drop dead number. If it took out this 14,980 number, that would be not good. That would tell you that everything's going to turn south. So that's the number to watch there. All right, so the Russell doesn't look as like it wants to rally. It looks like it's going to lag some more. As I mentioned earlier, the Russell was the negative index today. It was down minus 0.24, NAS up 1.05, and S&P up 0.58. So we're really just looking at this being a laggard again. I was looking at some charts earlier today. Let me just bring something up here real quick because we haven't looked at this for a while. But you can see the Russell versus the Nasdaq over here. It looked like we're doing really, really well. We came in, into beginning of the year. It looked like we're going to get another shot here off the lows as we came in through June, and it's not really faltering. This is a weekly chart. I think if I change it to daily, you'll see a little more. You can see it's just really flat-lined. We got a little bit of a bump on the upside, but nothing really. It's just nothing there really to talk about. So it looks like the Russell is just going to continue to be a laggard, and that has a lot to do with some of the drag on the banks. They seem to be stalling as well at these levels. So we'll just continue to watch that. So we'll go back to TradingView here. But you can see the downward slope in the Russell. It's different than all the other indexes are sloping up. So that tells us that we're going to see a squeeze even more on that pair Russell versus Nasdaq, or even the S&P as far as that goes. All right, so we'll get into the 10-year here. We're going to start with the 10-year, but we're going to look at the 2.5s and the 30s. And I just basically, and I want to go to weeklies. So I want this viewpoint on all of these. The weekly patterns are what we're going to be watching. You can see a couple things is that the 10-year has a slight upward slope. What's really interesting, and this is what I was mentioning on the opening comments, is that as you go out on the back end on the 30, I'm going to show you that next, then you'll be able to see a little more of a dramatic view. So let's just go to that right now. You'll see that upward slope is even a little more increased from the standpoint. It looks like the algos are going to get into what I call the 1+ integer. So you're going to have a 1.29. That's an insane uptrend, and so we're likely to carry us all the way into that third week of September that I focused so much on last night. I still think that we're going to see these, yields climb into that level. And I have to look at the auction schedule to see exactly what type of auctions are coming in, but they're going to need to, they got to attract some buyers somehow. And there is some minor liquidity issues, and the banks and everybody's still underwater. There's still that mismatch out there on the banking balance sheets. Hopefully they've been smart enough to correct some of this stuff from the standpoint of their buy to maturity portfolios. We'll have to see what's going on there. But I think what we're going to see is this slope here. So you can see the 30 is a little more dramatic. I know I'm all over the place here. We're going to go to the 5. And the 5 is a little flatter. So this goes to that back end of the curve, the very back end. The 1030s look like they're going to be sloping up. There'll be much more pressure on those because of the refinancing that's going on. I talked about this yesterday, that the Treasury focused on the front end to fill back, get their checking account going again. So they got about $600 billion in the checking account. Now they're trying to get a little longer structure to their portfolio, which makes sense. And they want to push, I don't think they want to push the yield out, the duration out too far, but they need some duration here so they don't have to keep rolling these bills. They can still, it's still advantage right now because you're looking at right now the 421 here on the 5-year. And that's something I forgot to, I'm just going to go back. I want to go back to that 30 yield. I forgot to note those. The 30 yield is at, it's at 429. So that's better than the front end of the yield curve up above in the 5 handle. So there is a slight advantage to financing out right now with the yield curve like it is. But that, I think most of that's going to go away. But they're going to play with it the best they can from that standpoint. So we got 429 on the 30. Let's just go through the spectrum here. We got 418 on the 10, the 5 is 437. So there's a little bit of that spike, 437. And then, of course, the 2 we're looking at 497. So we still have kind of that front end inversion, but you're going to see this stuff start to completely flatten out here. I suspect around 420, 430, maybe a little bit higher. So that configuration will be driving the narrative, at least around the banks and around everything, is likely to just continue to be the big focus out in the marketplace. So I will answer a question that's on the timeline here. Somebody wants to know if I'm bullish or bearish. Our database on intermediate is long. 75% of it's long. I'm not bearish. Okay. I still see upward momentum and things that are still driving prices higher down the road. The short term is sideways and with the slight bias over the next several days to the upside. So that'll tie you in if you came in late. All right, let's go to the dollar. And the Dow continues to be bullish. This is weekly charts. I've been doing weeklies on all these. It's still got some upward bias here, but we're coming into this resistance point. We had 3 fib targets. This goes back just about 2 weeks ago on August 7th. We have the high target 1 is 103.48, and then 104.98, 105.90. And it looks to me that they're trying to stall here, but there's still a bit of a bias to the upside. Your support level is being to the market grid on a weekly basis, the extreme 102.12, but probably as we look at the week here, probably 102.77 has been the low, so that's right at S2 right now, and S3 would be 102.37. We should stay within those bounds. And on the upside, we're looking at probably R2 103.68, the high so far 103.45. So we're looking at R2, S2 probably in this range this week. But it does look like we're about to stall here. I don't think we get to these upper fib targets. The first fib target here was 103.48, which we've hit almost exactly. So that number's been satisfied. But like I said, there's still a slight upward bias here. And I think that goes hand in hand with the analysis in the treasuries that the treasury differentials will probably keep some bid into the Dow, because that Dow demand, if we're going to refinance the back end of the curve, then the Dow, if we're going to get outside participation, then the Dow should stay at least reasonably firm during this time. And I don't see this thing just rolling over here at the moment. All right, sticking with the theme with the weekly charts here. Hang on. I touched the space bar and it took me back. So we still have this upward bias on the crude oil. It's still likely to stay above this line. Like I said, everything, folks, is pointing to that second to third week of September is where things are finally look like they're going to pull back. There seems to be a switch, this upward trend, and some of this expectation for the increase in inflation due to the higher crude oil. That's probably going to be talked about as we come into into this mid-September. So there's still plenty of things to kind of keep that conversation going, and probably keeping the yields higher and therefore keeping the market in check. I'm really just looking at the short-term activity to be fairly stable in the market. There's still, I didn't mention this when I was covering the S&P, but there's still a potential, it's a small one at the moment, for a 43.40 type range. That would be a handle below where we went as far as the current low. But I think we've seen most likely the extreme on the low at the moment from the standpoint of the equity markets. I think we're pretty close, especially on the S&P. The S&P seems to be a lot more stable from the standpoint of the patterns that we're looking at. But crude oil looks like it will stay on this upward slope right into that second, third week. The downside bounds on this thing is down at the S2 is 80.50, S3 is 79.74. We're trading 82.33. We printed up into an 83.20, so we're stalling right at these fib targets, and the high fib target 82.58, 85.28. So we got just short of that of that number. We printed 84.89 with that high number at 85.28. So we went right basically to fib target 3, and now we're just going to follow the trend. We're seeing some of the PPM starting to lose momentum, and it doesn't look like, I said, the first breach of the what's being projected right now off the algos are the first breach will be in the second week, end of the first week, and beginning of the second week in September on crude. So maybe we can start to see some softer prices at that point. All right, so gold next. As I've been talking about, this is a pretty quiet market. This is a weekly chart again. We are seeing some loss of momentum. The 40-period moving average is still, the PPM3 is at plus 0.27, so it's still in trend mode. So that value is going to be fairly significant in the pattern we're looking at right now at way down. Let me make sure I get the right number. Around 1920. Let me get this value here for you. Yeah, so that number is 1919 is where that number is at right now. And that's up sloping right now at about $4 per week. So 19, 20, 25, 29, we should see support and see things start to stabilize around there. But gold's really, really quiet right now, so not a lot there. We are seeing the PPM1 is about to increase, but it's still going to stay, it's being forecast to stay below its second derivative. Yeah, I just had a data loss. You folks are still hearing me. Give me a thumbs up or something. Everything looks live. I'm not sure what happened. Okay, so let's go ahead and go to final market Bitcoin. Not there yet. So Bitcoin is almost like gold. I've talked about this, but we've got this very narrow range that is being projected, and this is weekly. Again, we'll go and take a look at a daily, but weekly looks stable going forward, trading right within that market grid range, which the extreme low 28,237 is STX, 28.5 is S3, and on the upside we're looking at 29.7 and 30,000 as the resistance overhead. It does look like that over the next couple of weeks we're going to see some softness come in. And yes, Peter Schiff will be disappointed. I didn't make my Peter Schiff comment. Thanks for reminding me. So let's take a look and go to the daily. Continuing this incredibly strange, unorthodox pattern here. And I think with all the stuff that's going on around crypto, I mean, what we've got now, PayPal is now doing, has got a stable coin they're launching, right? So everybody wants in the game all of a sudden. But what we're seeing here is some weakness being forecast, and we have these downward fib targets, which is interesting because they suggest that we could go down into some of this downward range here. So low target 1 is 28,856, 28,339, and extreme 28,019 on the daily. It doesn't look like there's extreme weakness coming, but it does look like there's some potential downtrend on the daily, which will bring us into those support values that I just talked about on the weekly. So not much here at all. So we'll just have to keep an eye on that. Okay, folks, tell you what we'll do here. It's a little, we're into the show about 40 minutes. How about I cover maybe a couple stocks that we should look like Apple, I think Nvidia, and give me a couple suggestions off the chat line. So somebody says ES is ripping. It is indeed at 14. That back screen on the top is a 5-second chart. So, yeah, I said that we're going to see those numbers I talked about. So, yeah, we got to do all those, right? I'm not going to do a lot, but enough to get through there. We haven't done anything like this for a while. All right, so let's do the typical stuff. I'll go back on screen here, and we'll just take a look at a couple things here. All right. I need a button for stocks, and I will add that. So let's just go. We'll call it Wave Tech here. All right, so let's take a look at Apple. And Apple is interesting. It's getting a bubble bottom, and it was somewhat interesting. I thought we could go to as low as around 170, 167, but we definitely are getting formation. Looks like we've got a day or two more of potential weakness, but look at the market grid. It already has an upward slope here, but this downward slope on the PPM1 is serious. It's at 0.91, so you're going to have resistance at that 10-period moving average, which is going to be right at, that's going to be 183.34. That's going to be serious resistance here. And if you notice this red line up here, this is one of those pivots. So if you have the indicators and you put the Fibonacci projection tool, you'll get these pivots where there's just one line, and that was up there at, that was 185, and it looks like, I'm just trying to get these, the number I just gave you was an incorrect number. Let me give you the right number, 183.34, and that's coming down daily. Yeah, that's coming down $1.70 a day. So you're looking at 182.5 or 182.25 is going to be resistance. Decent action. Maybe if the market can break, we can get a little bit above that, but I don't see that happening. Sorry, I keep getting data glitches here. So this is, I just want to pull, get that off the screen there. Okay, so yeah, so that looks like the resistance. This is the daily. Let's go to weekly. And weekly starting to form. We did get some downward projections here, and there's a big pivot down here, which is monster number, which is right at 161.60 on Apple. That's all the way down on the 40-week moving average. But this is already starting to get a little bit of an upward slope here, but the negativity on Apple is going to continue. So this may be the drag on any kind of market rally here, as it's going to have difficulty getting much above here. We look at just the weekly market grid, R1 179, R2 182. That puts us into that resistance zone I just talked about on the daily chart just a minute ago. So it's pretty limited here from that standpoint, but we've definitely got big downtrends forming. Or the one thing that is happening here, if you look, ppm2 is a plus 0.51. That's going to act as a magnet, and that line is right now right at the 179.15 level. So we're going to hang around that level. We probably could trade up to at least an R2 here from the standpoint of the numbers. R2 would be 183, 185 would be an extreme here from that standpoint. All right, let's go through, let's go to Tesla. So Tesla's in pretty big downtrend as well, and in fact, accelerating. It's minus 0.17. This is weekly, so not quite in trend mode, but working that way. But look at the algos. The 21 is about to cross its second derivative, which means we should challenge that value. That value right now is 222. Last trade here is 239. So break under 222, you're probably heading down to some of these other numbers. In fact, there's fib targets on the downside at 209 and 193. So it looks like everything's rolling here pretty good. Let's take a quick look at the daily. Yeah, we got a huge downtrend. ppm1 at minus 1.09. Big time downtrend. 0.75 on ppm2, and ppm3 is getting into that. We had this this pivot zone, which was the resistance point. You see these red dots up here, was 268. We look at the highs here, 264. We printed 266. I'm just looking at these highs along here, 269. So that red area, that pivot became a resistance overhead, and that was your ceiling before this decline. So it looks like based on the weekly, there's quite a bit more on the downside. So like I said, these are going to be drags on the front end because of the capitalization weighting in the S&P. So, and that's going to be a little bit of a drag. That's why I don't expect to see us maybe get up into the high 45 handle on the S&P and to the numbers that I discussed in the Nasdaq a few minutes ago. All right, so NVIDIA, this is daily, got an RTX sell signal, that little reversal. I know it was down big numbers and reversed up, but the algos are suggesting at least some more strength, but lots of resistance here at the 418 level, right in that range. Let me get a better number for you. That is not, the best number is going to be 450, 439 are pretty decent resistance. So we're right into that resistance. We should probably stabilize here, but it looks like we're going to roll back into the pattern. And this is daily. So what I would watch for, if you have the indicators, look for not tomorrow. They're already calculated for tomorrow, but after tomorrow's close, you could see the market grid turn down, and that'll give us a little bit of a target on the downside from that standpoint. But otherwise, what we're really looking at here is, a large consolidation. And I'm going to go out to and go a little more deeper here. The weekly, you can see we've got, we're still very positive. So we got almost down to this 21 period moving average, which is actually going to be the driver in this pattern. You can see overall the angle of attack on this on a weekly is still very positive. But if we go back to the big spike in values here, going back to the 17th, back to the 6th, this is a weekly chart, and going back to the previous week, in July 10th, the week of July 10th. That we got an RTX sell signal. We've been sideways to down since. We had an RTX sell signal over here on a spike on May 22nd. We got a couple weeks sideways, back into pattern, got another RTX. So this is struggling here. I think what you're setting up is something a little larger from the standpoint of consolidation. I'm going all the way out to monthly here, folks. We're gonna this. So monthly is very interesting. We had, if we go back to all the way back to February of 23, we go back to February on the monthly chart, we had 3 Fibonacci targets for NVIDIA. And in fact, if you use WaveTech, I believe we were buying around the original buy. I was just trying to get values. I forget. Yeah, I'll bring it up here in a minute just so we can see it. But this is a monthly chart. So, but the monthly was suggesting the 3 targets were high target 1, 338, 427, and 481. So we hit right here 480.88. So this was predicted and projected out. And then we get the market grid turning down. You see the PPMs are turning down. I'd have to change the values. Let's just change on inputs here. So if you are a user of if you have these indicators, the coefficients are trying to look back 150 for the predictive. When you get into these longer term charts, there may not be enough data on the chart. So if you change that to 50, you can see what's happening, what's going on here with this. And let me do one more thing just so you can see what this looks like here. I'm changing the predictive value on the coefficient on the predictive indicator or on the 10 period moving average. So you can see that's what the projection, I won't do it for all of them, but you can see there's still some pretty positive trend coming in. It looks like that what we're going to get here is just a very large, now this is monthly, okay, a large consolidation up here. And then there'll be a decision that looking at the algo prediction, it looks like this may end up to be a peak value of some sort. And we'd have to revisit this to see where it's going to go. But this upward slope here is looking like around, if we go out just a couple months, around 360, 380 is going to be where support's going to be, and there's still an upward slope. So there could be one more high in this program. All right, so we'll do, what time is it? We'll do one more. So I'm doing the super micro computer. Somebody asked for that. So we'll finish on this one. This is a monthly chart. You can see we get this huge reversal, pretty much a RTX sell signal last month. Let's come back down to earth here. Let's go to the daily. You can see daily still in a downtrend. Looks like we're not going to bottom until maybe another several days before we start to see a bottom coming into late August, maybe another 8 trading sessions before we'll start to see more of a bottom. There is a pivot number up here at this 329. Let's go to weekly just to get a feel for this. Yeah, so you get big outside bar reversal here going on. It was interesting because here's the fib targets. We came just close to these fib targets. The fib targets were for a 390 target. We printed, it looks like the high printed only 357, big outside reversal. did get an STX buy, so you probably get a couple weeks sideways consolidation. This 21 period moving average is your max, but look at the PPMs are just suggesting that we're going to continue to lose momentum in this, and it should flatten out. So we'll probably see a consolidation here, and it won't be until maybe coming into October or something. The stocks is just going to be very, very locked into this range. So I would use the market grid weekly to guide you through week to week on that. Okay, folks, that will do it. That was fun, actually, going through something new and taking a look at that analysis. But I guess in summarizing, looking at especially Apple and Tesla, looks like there's still some intermediate downside there, and I'm pretty sure we're flat in those stocks on WaveTech, and on a short-term basis. On an intermediate, we may still be holding some, but I haven't looked at them, so we'll just leave that alone as far as commenting on that. But it looks to me that there's still downside in those markets, so it's going to be tough to hold those, and I guess over the next several weeks, depending on what kind of configuration. Like I said, those Apple and Tesla will be a drag on the S&P. And without, if we went through all the fangs or went in through the top end of these indexes, we could probably break down the expectations, and you could see what was likely to be participating and not. That's going to drive the markets, because these indexes are heavily weighted on the top end, right? That's why everybody says there's 7 or 8 stocks that are driving the markets. Well, those are the heavy weightings, but their reference and what they're saying is nothing else is moving but them, which, like I've been arguing for weeks and weeks and months, that's not true. There's plenty of stocks. Like I said, you could have bought the home builders and ended up, you can have made 100% buying home builders in January. So even though Apple was up 50-some%, there's good moves in those 8 stocks, but there were lots of stocks that were better from a pure return standpoint out there. So, but they weren't heavily weighted. So if that's just that's another one of those elements that the marketplace basically looks at the way that they want to manipulate thought. If you think about the media and everything that we deal with every day, folks, somebody's trying to set what you think and how you think and what you do all the time. So it's very, very hard to be independent. And that's why we offer our products out. You folks, if you go back to last October, I was telling you when we started to get traction, and I started to talk about maybe August, September of last year. A year ago right now, I was in Dubai, so I was not here. But when I got back, that whole September, October period was exactly when the market started to turn. And of course, October we got the traction, and by November we were over 42%. And I've been telling you, forward looking, we got 150 days, and they even got better as we came in to the first of this year. And here we are. We printed 4,600, and the low was 3,502. So lots of progress been made. There's still a very strong trend in place, and all we're seeing, I believe, right now is just a consolidation. And I set it up. Tomorrow I'll talk about the database when we say it, but the intermediate database is still 75% long. And as I showed you last night, I believe about 35% of the duration, and it's even less. I think it was only 16 or 17% of the expected returns from our database has yielded already. So there's still a lot of upside. These stocks that we chose today, which are the popular ones and the heavy weighted, just looking at Apple and Tesla, those folks are going to be struggling a little bit and watching those. So you want, one of the things that you want to do, I'll go on for just a minute since it kind of got me into thinking and going individual stocks, is one of the things that you see, like if you took, we have a model that runs all 500 stocks in the S&P individually, and it reweights and trades each stock individually. And if you went back to 2000 when we had the dot-com bust, what we actually, the S&P, our S&P strategy ended up positive in 2000. And why? Because it sold all the AOLs and all those stocks that were rolling over. We got out of those and we bought the secondary stocks. And the S&P was structured way different than it was then. Maybe not way different, but it's the capitalization. What we did is we rotated to the mid caps in the index, and we're able to make returns because all the selling and all the activity was on that top end of the market. So it's almost, when you start looking at how you break down the indexes, you start to see a much different picture. And I'm working on a project I've been telling you for maybe a year and a half to put together an ETF hacking site that will be I guess we'll call it a sister product to using WaveTech and Portfolio Expert. We're really working hard on getting some of this stuff out, and it'll probably be, the content won't be every day like it is on this channel, but it will be weekly, or maybe a focus hack every month or something like that. It has to be something I can maintain. But just know that when you start to break down these indexes and stop looking at just those few stocks that are on the top, there are other opportunities. And that's why I go through our database every day. And like I said, I wish we were live so I could bring that live to you every night. That was the one reason why I used to do the stream much later at night. It's just, this is way better for my life to be able to get out of the office by 5 p.m. Pacific time. So that's a big difference for me. So folks, thanks a lot. Thanks for the suggestions on the stocks. We haven't done that for a while. Maybe we'll pick a day and we'll have stocks. Let's do this. Anytime I'm coming up short and I have virtually no notes and there's not a lot to talk about, we'll go through and cover some stocks. And in the beginning of the stream, I'll let you know that we're going to have time so you folks can be thinking a little bit out of the box from the standpoint of just the Apples and the Teslas. Anyway, thanks for watching. As always, I really enjoy hanging out with you folks. It's a great community. Get the indicators, kendallreport.com/indicators. And they're good folks. I know it's hard to say something about your own product, but this is stuff that I've used for decades. The only thing that we've added is these algos and this predictive capability, which for me has changed everything. So I'm hoping that maybe Friday I'll be able to do another stream, but I just get fixated on the setup that I had. So if you haven't seen that, go back, watch that stream covering the indicators on Friday. It was a live stream intraday on Friday. Anyway, folks, have a great evening. Good day trading tomorrow. See you tomorrow night. Yeah, as far as the pricing on the indicators, they're going to be going up quite a bit, I'll tell you. We'll have a release of what that's going to be. Hey Gil, we're going to do a WaveTech overview. WaveTech covers 15,000 plus symbols, so there's a lot to it. Software is our biggest. Thanks a lot for watching.